काही नाही आता भाजी मंगावून डोसा आता काही नाही त्यांच्या मम्मी आमना
Thank you all for joining in. The webinar will begin shortly in the next few minutes. Good evening to each and everyone gathered here for today's webinar. In this episode of Equity Outlook, our Chief Investment Officer, Mr. Sunil Lamania, would be providing us his opinion on the market going forward. After a quick recap of what happened exactly in the previous year, he will be providing us a strategy we should adopt in the next fiscal year and how to invest in this volatile market with a portfolio. Towards the end, he'll also be answering some of our questions. Over to you, Mr. Sunil.
Hey, thanks a lot, Jason, and very happy new financial year. Today is the first day, and I wish that you make a lot of capital gain in 2023, and Markets Mojo will help investors to create a lot of capital gain in new financial year, the way we have been doing from last 6 years. Now, what I start today. There is a very famous saying that well begun is half done. And the first day of the new financial year, market did extremely well. In fact, I was reading in one of the WhatsApp group that the advanced decline ratio has been one of the best in a recent history today. The way the market surged, so that rally that we saw today has been across all the sectors, all the whether it's a mid, small, a large cap, and that kind of a scenario. And that really gives a lot of satisfaction for the very simple reason, because it gives an idea that this buying that is happening in the market is not so shallow. It, in fact, it's spread across the larger coverage of the company. On NAC, 77% of the company advanced today versus only 21 or something which declined, and that gives an idea how good the market was today. So will this trend continue for next 364 days, or what kind of outlook that we see? Remember, there are some of the statement that I'm going to make may or may not come true. Okay, the same way, if you remember last year in April 2021, I had made similar prediction in front of you. I'm also going to tell you what I predicted and how many have come true. So rest assured, some of my prediction will go wrong. I don't know which one will go wrong, otherwise I would not have made the prediction. Some will go wrong, but overall I think it should play out on the same line it has played out even last year. So with this, let me begin my webinar with a normal disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance is no indicator of a future returns. So let's look at first how market perform. But before that, Jason, I want you to run a very quick survey. The Nifty, I stand there, Dow and Nasdaq gave returns in FY22, then options are less than 5%, between 5 to 10%, 10 to 15%, and 15 to 20%. Okay. I want you to please participate in that. Again, repeat if you want. Jason, should I repeat? Yeah, less than 5%, 5 to 10%,
Yeah.
10 to 15%, and 15 to 20%.
And when you said 2022, you mean the financial year or the current year? By year to date?
Financial year, sir. Yeah, financial year. Okay.
Yeah.
So, this is a happy new year financial year. In fact, I had requested Jason to give the slide, and even nice enough to say the slide to me. So thanks a lot, Jason, for this. Okay. This is the way the Sensex behaved in FY 2022. When you are ready to let me know. Okay.
Yeah, I can run it now. Should I launch it?
Yeah, please do that.
Yeah.
I want everyone to participate. Indian market gave 18% return in FY22, just to help you put the benchmark just to give you a perspective. I can see 63%, 64%. बहुत सिंपल सा सवाल है, जिनको इंग्लिश में थोड़ी दिक्कत होती है उनके लिए, कि कितना रिटर्न डाउ और नास्डेक ने फाइनेंशियल ईयर 2022 में दिया. ओके, और आपके ऑप्शन से 5% से कम, 5 से 10%, 10 से 15% और 15 से 20%. बहुत सिंपल सा सवाल है, एंड मैं चाहता हूं कि आप लोग इस पे पार्टिसिपेट कीजिए. 78% आई कैन सी. Okay, 79. We'll wait for a couple of more seconds, Jason, before we conclude this. I can see 80%. Jason, ये लोग शर्माते क्यों इतना पार्टिसिपेट करने के लिए?
अगर ऑप्शन नहीं है तो एक थ्री बटन है वहां पे मोर का, क्लिक करके वोट कर सकते हैं.
अगर आपको ऑप्शन नहीं दिख रहा है तो 3 बटन है, उस पर क्लिक करके दीजिए. 82. ओके, लेट्स कंक्लूड. अगर आप देखोगे तो सिर्फ 25% लोग मानते हैं कि डाउ और नास्डेक ने 5% से कम रिटर्न दिया हुआ है. जैसन, आपकी क्या संभव, आपका क्या ऑप्शन है उसमें?
मेरा क्या वोट था?
अने आपका व्हाट इज योर पर्सनल ओपिनियन?
Around 10 to 15%.
10 to 15%.
Yeah.
Now this is how the market, the brain plays a trick with us. You'd be surprised to know that only 25% people are right. Why? Because Dow and Nasdaq gave less than 5% return in FY22. And that's the beauty. So sometimes our perceptions are based on what we read and what we do, but the reality is a little different. 75% those who participated in this poll have given wrong answer, and I don't blame them. If I have not been related to the market, I may also make similar kind of a assumption, but that's the fact. So sometimes, you need to be, and now Indian equity market last year gave 18%. When I say last year, financial year. So whenever now I say last year, assume for this webinar, I'm referring to FY22. If in April 2021, when I made a presentation, that also something very similar happened this time also, this year also. So second year in a row, the lowest level of the financial year was in April month only. So last year it had happened in April 2020. This year it happened in April 2021. So had you remained invested in market in April 2021, probability was very high that you would have made money. Okay. Why? Because the Sensex did not touch that lowest level of 47,204. This is the first time in the history of India Sensex crossed 60,000 in FY22, with the highest level which was seen in 19th October 62,156. And then since then, market has given up some of the gains. Of course, we saw some rally here, as you can see, has been a smart rally that market has seen, but the market overall gave 18% return, but it's unable to bridge that 60,000 mark that has been touched somewhere in the month of October. So I think there has been a lot of resistance that we are seeing in the market post-October, and that's clearly visible in this graph. In my next slide, I'll show you how the Indian market behaved quarter-wise, so that you get in perspective. The gain that we saw in FY 2022 is mainly driven by the first half. Second half was completely washed out in terms of the returns for the investors. In fact, many IPO that came out in the second half did not create wealth for the investors. And why is that so? Look at this graph. Look at this table. In the first quarter, June 2021, the Sensex gave 6% gain. For the month of September, for the quarter ended September, gave 12.7% return. And then the December and March completely washed out. So many investors must have joined in the month of September, August, September, and so forth, they did not see that kind of a rally in the market for the very simple reason, because overall market sentiment went little soft. So as the year came to an end in 2021-22, the market did recover from Feb level. March did very well, but despite that, the gain was not there. The second half was completely washed out. And I keep telling investors, equity is all about non-linear returns. The 18% gain that we saw in FY22 got over only in September 2021. Uske baad market chala hi nahi. In fact, almost remained at the same level or gave negative returns. And that's the beauty. And remember, when I'm going to make this prediction for the next year, I'm giving you hint. Something similar is going to happen in FY 2023 also. So don't, and hence I always keep telling investors, don't get too much caught up by short-term volatility, because that's not how you should invest in the equity market, because utar chadhav to aane wala hai us market mein, and you should not get panic or you should not get too much excited. Many investors I know got little excited somewhere in the month of August and September, thinking this really will continue, and the data is in front of you. You can see what has happened. But having said that, I'm not saying that they made a wrong decision. Why? Because I do believe that Indian equity market will do extremely well. And I'll also tell you the period for which it will do well in the later part of my presentation. How the overall market did well? Was it only the Sensex and Nifty did well, or did really also got populated down to the mid and small cap? You'd be happy to know that second year in a row, small cap did better than mid cap, and mid cap did better than the large cap. Second years in a row, and in fact, if you remember, I was always making one chart in my presentation, which suggests that why there is enough rally in the mid and small cap. And I always tell you what percentage of market cap is being accounted by mid and small cap. And I give you the perspective again in this presentation also. I've added that slide, but it will come a little bit later. 2 years in a row, small and mid cap did very well. Unfortunately, if you look at it, the kind of gain we saw in FY 2021, we don't see that kind of a gain in FY 2022. It will be a little subdued. 71% that Nifty made in FY 2021, of course, from a lower base, because in March 2020, we saw a massive drop because of coronavirus, and hence we should not get carried away. 71%, 19% is too less, because we need to also see what happened before the financial year began. So on a strong base of 71%, market extended the rally. I distinctly recollect in April last year, same time, when I was making a presentation, some of you were extremely concerned. Arey, market itna bhag gaya hai, how can you make money? And if you remember at that point of time, I showed you with the graph why we do believe that this rally will extend. This rally will have a legs and it will extend. The rally will get extended. And that's exactly what has happened. On the 71% gain, market gave another 19% gain for Nifty, Sensex 18%, Nifty 50, Nifty Junior, that's 20% gain. So, you know, and many times some people ask me, why do you take only Nifty 500 or Nifty, not Nifty 50 kind of stuff? If you look at the gain, there are only 1 or 2 100 basis or 200 basis point difference only between the gain that you see 19, 18, 20, 19, 20, 21, and so. But mid and small cap did extremely well. And I'll come to that slide. Will it continue in FY 2023 or not? I am so sure a lot of you would be loved to know what is our view on mid and small cap. In terms of sectoral performance, power did extremely well. Okay, followed by metal. Metal is, in fact, last year also did well. This year also did very well. Telecom is more of a story. In fact, complete telecom sector got related, to be very frank with you. Why? Because government came out with a very conducive policy for the telecom sector, allowing them to pay in installment, or also government has an option now to convert some of the borrowings into equity and so on and so forth. But this telecom story is more of a function of Bharti Airtel, not because of Vodafone Idea. And today you must have read that the promoters are willing to buy a stake in the company at a higher price than the market price. Realty index also did well, 38%, but the sorry sort of affairs continued with FMCG companies on the bottom of the pyramid. Last year, something similar. And if you remember last year also, I told you Bank Nifty and bank finance will underperform. And they exactly underperform. 18% gain in Nifty 50, 9.2% gain in Bank Nifty. 50% underperformance. And time and again, I've been advising you to stay away from the banking stocks, barring one or two stocks, because sometimes some company may do well, the sector may not do well. And this is what has happened. So this is like, if you have invested in these four sectors, probability is very, very high that you would have not made the money that otherwise you would have made. Jason, I want you to put one more way. What kind of returns your personal portfolio made? Again, repeat the word personal portfolio in FY 2022. And once you are ready, do let me know so that I can stop and we can start the. Now come to the best performing Nifty 50 companies. Bajaj Finserv continues to defy the gravity and did very well. Hindalco up by 74%. Titan up by 63%. A lot of you people, always have a concern. Titan itna महंगा है क्यों? But look at this company. Tata Steel 61%. ONGC getting a benefit of crude oil prices is up by 61%. JSW Steel again a story of steel. So if you look at some of the best performing companies, where are they coming from? They are coming from steel. That is, sorry, not the steel, but the metal. Whether you look at Hindalco, Tata Steel, JSW Steel, okay. At the same time, some of this commodity business like Coal India, which is getting into power as a theme came out very well. Why? Because if you look at Power Grid, NTPC, Coal India, which are related to power, they did very well. And Reliance Industries, which is the most valuable company, was up by 32%. So there was a theme in Nifty 50 in terms of who did well and who did not do well. Now, very interesting thing, if you look at, I have not seen for many long period of time that HDFC Group will underperform. But the fact of the matter is that in Nifty 50 companies, there are 3 HDFC Group companies are giving negative returns. When the overall Nifty 50 gave, which their constituents gave 18% return, HDFC Life down by 23%. What surprises me is that when HDFC Life is down by 23%, if you would have seen, the SBI Life is up by 27%. So one hand, same sector, one company up by 27%, same sector, another company down by 23% for the same period. So sometimes, when I told you that some sector will not do well, that doesn't mean that each and every company in that sector will not do well. And at the same time, when I say some sector, the sector will do well, that does not mean that each and every company from that sector will do well. There will always be exceptions. That is what happened. Hero MotoCorp, I think a very sorry state of affairs with the corporate bonds issue coming up with the government agency doing investigation. But on one hand, Tata Motors continue to create wealth. Some of the auto companies like Hero MotoCorp, Eicher Motor, Bajaj Auto completely underperforming. It's not that they are underperforming only today. They have been underperforming last year also, and second year in a row they did. While Tata Motors was one of the best performing company last year also, it has continued with that. Pharma, again, a mixed bag. Again, why I'm saying so, because Dr. Reddy is down by 4%, but Sun Pharma did very well, 53%. I can't recollect in the recent past once that corporate bonds issue come up for Sun Pharma, it featured in one of the best performing Nifty 50 company with return as 53%. So I think clearly, again, same sector, but divergent performance. If we expand that list to Nifty 500 companies, Angel One did very well. See, the another beauty is that not a single company, except Hindustan Unilever that we recommend for a very brief period of time, not a single company, or I think even Ultratech we recommend it and we advise you to get out. We did not recommend any company as a buy in Nifty 50. And that's the power of markets, Mojo. We not only suggest you right company, and we also advise you to avoid the wrong company which is not going to make money. Some of the company like Bajaj Finserv we hold in model portfolio, Hindalco we hold, Titan we hold, Tata Steel we hold, Bharti Airtel, not Tata Motors, Wipro we used to, Bajaj Finance we own, Infosys we own, Coal India has become recently Mojo stock. So there are many companies which Markets Mojo identified and created a lot of wealth. One of the best performing company, that some of the many companies that we continue to hold in our model portfolio. At the same time, the worst performing company, we don't own any of them. So Markets Mojo knows how to select the company and how to avoid the company. The same way, this Nifty 500 Angel One is part of our model portfolio, up by 428%. BAC, Gujarat Fluorochemical Terminal, Trident. Here the mix is little the mix is little divergent. It doesn't represent one sector or so, because you see some company like HFCL doing well, but not Sterlite Tech. Okay, like we can see some company like GNFC doing well, but you don't see many other fertilizer companies doing very well. RHI Magnesita is also one Mojo stock, which is a part of this one. And you don't see the dominance this time for a change of an Adani Group company. Okay, only except Adani Transmission, which is up by 161%. No other Adani Group company feature in the top performing Nifty 500 company. KPI Mill, which is a part of a Mojo stock we continue to help, is also part of our best performing list. Which company did not do well? Dhani Services, Strides Pharma, Dilip Bilcon, Solar Active, Ujjivan, Weber Global. If you remember, Sequent Scientific, we advise you Weber Global and Sequent Scientific at the right time, and we also advise you to exit at the right time. Otherwise, the profit would have been resulted into a losses. And banks like RBL and Bajaj Consumer, they have continued to underperform the broader market. In terms of IPO, I think here again there is no clear-cut theme that gives an idea that which. But as we see, Adani Wilmar, which came out with an IPO, did extremely well. Barbecue Nation, which is the hospital industry for a chain, did very well. And in fact, I was surprised, to be very frank. I was not expecting Barbecue to maintain above its IPO price, but it did very well. The worst performing company in IPO company in FY 2022, One Communication, 74%. 74% down. Suryodaya. So if you look at in this, there's many companies which are, a few companies are from finance. And I think that one thing which clearly plays out very well, whether it's a 197, Suryodaya Small Finance, Fino Payment Bank, and that clearly shows that investor sentiment towards banks and finance have gone little subdued. And of course, there are some of the company like Landmark and Sriram Properties and cement company Nuvoco. It has not done so well. Again, time and again, we have said, do not invest in IPO blindly. Don't chase for the listing gains, because sometimes listing gains may not be there. And then many investors do leverage, thinking that if company is going to do well, let me buy that company, I'll make more money. So my request to all of you is that be careful when you apply for the IPO. This slide will help you understand that. Now, this is a beautiful chart, and I was going to spend a couple of minutes on this chart. Why I'm saying so? So what I've done, I've taken each financial year from 2002. And we are in 2022. Am I right? So I've covered 21 years in this graph. How each financial year the Sensex has given returns, whether it's given positive returns or it has given negative returns. And as you can see, out of 21 years, only 6 times, which is 30%, the Sensex has given negative returns. So on first day of 2022, you must remember that there is a 70% probability that broader market will give positive returns. Why? Because that's what the historical trend is saying. For some reason, market go down. What we have observed, that the downturn does not sustain for a longer period, except in 2002 and 2003, where 2 years in a row, the market remained in negative for 2 years in a row. Otherwise, market goes down and then bounce back very, very strongly. So when you invest in a 3 years block, even if you have invested here, 2 years you exhaust the pain of market not doing well, but then look at it. 1, 2, 3, 4, 5 years in a row, you get substantial gain, isn't it? So when you look at, you must have observed, observed one thing which I keep saying: invest in equity market for 3 to 5 years. And one of the reasons why we say is that if you look at the block of 3 years at any point of time, probability is very high that you will always make money. So sometimes market may frustrate you, but if you have remained invested for 3 years period of block of 3 years, you would always make money. That we saw that in FY 2020 because of coronavirus, when market went down by 24%. Today we are very close to the all-time high. So I always keep telling investors, make volatility as your friend, not your enemy. And unfortunately, investors does exactly ulta of that. They make volatility as their enemy and not the friend. So keep 3 years, and this chart clearly helps you to understand why we keep saying 3 years, 3 years, 3 years. So minimum 3 years block, you will always make money. How did the world market do? And I was asking Jason this question. Dow and Nasdaq gave about 5%. It was less than 5% returns. Okay, and if you look at the small cap of United States, it's down by 8.1%. Indian small cap did extremely well. So many times, people say, "Arey, US market is down, that's why we are down." Arey, bhaiya, it doesn't work that way. Yes, there could be a short-term some kind of a linkage, but in the long run, there is no kind of a linkage that we need to talk about it. Okay, we have seen the divergence happening, and this happened. India is among the best performing market, equity market, in FY 2022. Best performing. Can you see? 1, 2, 3, 4, 5, 6, 7, 8. Eighth number India is there. And while some of the Russia, Hong Kong, another Russia, China, New Zealand, South Korea, United small cap, Shanghai, and Japan, they are struggling. There's another good thing which you must remember. Some of the countries that you see in the top performing market are from the emerging markets. And that's a very heartening. That developed market is not doing well, but emerging market is doing very well. When I do this Mojo Infinity review, many times that question comes that I want to invest in the equity market, US equity market. And I have been advising against them. Why is that? Very simple. Okay, let's look at this returns in a dollar terms, because I keep saying that in Indian market will always give you higher returns in dollar terms. Indian rupee depreciated by 3% in FY 2022. Now assume that you invested in Dow. You had an option on 1st April 2021 to invest in Dow and Nasdaq or invest in Nifty 50. And forget about fund manager. You chose passive funds. You put it in the ETF strategy. Even in dollar terms, Indian market did very well. And I'm making a prediction now, even though I'm not come to my prediction slide. I'm telling you, even in FY 2023, Indian market will give better returns as compared to Dow and Nasdaq, even in dollar terms. Even in dollar terms. So Markets Mojo will always guide you in a right manner because of its data insight, so that you don't make a wrong assets allocation or you don't do a wrong strategy in your creation journey. Now, this kind of money, that 18% among best performing market, has happened despite FI have been selling constantly 1.5 lakh crore a sale by FII in FY 2001-2022. Who should get the credit for this? I have not seen if FI sells this kind of a money, Indian market would be in green. And best performing market, no impact on the dollar rupee movement, 3% decline only, not much. Credit should go to you people. Retail investors has been the backbone of this country. And I can tell you, even if the FI decides to sell more, Indian market is not going to go down so much for the very simple reason because of resilience and maturity of retail investors. And I really great heads off to you people who done a wonderful job, did not panic, and every dip you people use to add more money, and that's one of the reasons India has emerged as one of the best performing market in the world. And this is despite FI selling. And 1.5 lakh crore is not a small amount by any stretch of imagination. Now come to the mutual fund. And the reason I do mutual fund for the very simple reason, a lot of you people have taken a lot of exposure to the mutual fund. So on an average, Indian equity market give 18% return, that is Nifty and Sensex, and small cap gave almost 38% return. Here is the data. Small 37% return. Okay. Against which, what is the category returns by the mutual industry? 37.7, just in line with this one. And this is the best return the category has given, 37%. So assume that you had no clue and you said, okay, but I have some clue that I'll invest in the best category. Had you, and I'm not going into which scheme and so on and so forth, the category returns of small cap, this data I've taken from Morningstar, is 38%. Multi-cap gave 27%. Dividend yield, that's a very good strategy which came out, gave 27% return. And then so and so, and the large cap gave only 19% return. Now, Ray, have you done that? Are you ready with the survey?
Yes, sir, it was ready, but I didn't want to stop your presentation. It's quite entertaining.
Yeah, please do that now. No, because I'm coming to a very interesting slide. That's why.
Yes, sir, given 5 options. Let me know it's fine.
Yeah, take care. I would request everyone to please participate. I can see 63% people participating. 70. बहुत सिंपल सा सवाल है, आपका पर्सनल पोर्टफोलियो FY 2022 में क्या रिटर्न बनाया? -20, -20 से 10, 0 से 20, 20 to 40, and 40 and above. We'll wait for a couple of more seconds and we'll conclude.
Yeah, sure.
I'm extremely hungry, so I thought let me have something.
Yeah.
Oh, wow. Only 10% who are attending this webinar have made more than 40% return. 20 to 40% is 29%. 0 to 20 is 50%. And there are many investors, almost 12%, who made 0 or negative returns in the market. Am I right? Now jot down this data. Only 10% investors have made 40% and above in FY 2022. You will share this screen to me, Jason.
Yeah, sure.
Now let's look at what happened. The portfolio that I gave you the last year same time on 1st April 2021, and I'm going to give that similar portfolio in this webinar also. Okay, on the same line. And I'm happy to inform you that portfolio is up by 51.6%. 51.6%. Only 10% of the investors have made that kind of a money. When I say above 40, I assume that they might be above 50 also. 51.6% return that we have made. And what was the highest category return by the mutual fund? 38%. That is only small cap. Assume that you invested, which normally doesn't make sense, but I'm comparing. Ideally, you should be comparing with multi-cap strategy. Why? Because our portfolio strategy was multi-cap strategy. This was moderate portfolio, which I had given last year. So against 27% category returns, Markets Mojo moderate portfolio gave 52% return. And that's the power of Markets Mojo stock selection and stock rejection. And this money has been made by investing in a good quality company like Infosys, HCL Technology, Mastech, FL, LG, La Pella, Vedanta, Vardhaman Textile, Dollar, CDSL, Hindalco, and Oil India. You saw some of the best performing company. They are also part of this portfolio of Nifty 50. And that's the power of Markets Mojo. And of course, I'm going to give you that similar, on the same line, stocks for you to invest in FY 2023 too. Now, let me go, before I reveal those companies and my prediction. What was our prediction? What I did predicted last year and what happened? So I predicted expect sharp volatility in the new year, that is in FY 2022 last year. The market was volatile and more so in second half, extremely volatile. I had predicted that reforms will continue and reforms continued. We saw a lot of PLI scheme, government supports, RBI support to see that whenever you get some kind of a need, it was done. And remember, we also saw a very severe COVID wave. As compared to first one, the second was very fatal in the sense a lot of people lost their life. There was a mini crisis in the country, oxygen supply and so on and so forth. And government really lived up to the challenge and did very well. But I did go wrong. Why? Because I had predicted that LIC would have gone public and BPCL would have been divested. LIC was supposed to go public and would have been right had there was no Ukraine and Russia crisis. But it did impact the sentiment and ultimately LIC could not go public last year. There is a high probability that it will happen this year and maybe in the first quarter only. That if market momentum sustains, LIC can go public in this quarter itself. But there is a lack of, right now, there is a lack of clarity what can happen to the BPCL divestment. I think we don't have a clarity because the bidders are not very excited. And what has happened, what is done by the government of India has been a sorry state of affairs. Why? Because they did not allow oil marketing companies to increase the price as and when the crude oil price surge. And due to that, a lot of oil marketing companies will have to take a hit on their balance sheet. And no investor will come and say, if you are going to dictate the price which I am able to sell, why should I buy your company? It doesn't make sense because I'm going to lose money. And hence, I think it's going to be a little deterrent. So I'm not very sure. Well, I get a confidence that in FY 2023, LIC would go public, but not very sure BPCL would have been divested. I had predicted inflation will be back. This is despite Jerome Powell and the RBI governor saying that inflation is transitory and it's not a concern. And inflation is back with a great force. So that prediction came true. And remember, this prediction was done in April 2021 when everyone had taken for granted that inflation is going to remain transient. And had gone and suggested that it will remain, will be back. And that's what has happened. I had also predicted that there will not be any further rate cuts from RBI, and that has been the case. I also predicted sector rotation will continue its date. I had also suggested it will not be an easy year to make money, and it was not. Not many investors made money, and which was obvious that only 10% investors made more than 40% return. The balance 90% made less than 10%, less than 40% return in FY 2022. And I must tell you, the next year would be equally challenging. In fact, more challenging than what it was in FY 2022. And I'll come to that part a little later of my presentation. But I was wrong. I had expected that returns would be in a single digit. But market did surprise us on an upside positively, and returns were in high teens in FY 2022. I had predicted not all sectors will give positive returns like last year, which was in FY 2020, but each and every sectoral indices close in the green. But there's one difference. there's been a huge divergence between the best performing and the worst performing. Like FMCG index gave only 3% return, and metal and power gave in excess of 50% return. So that's a kind of a divergence that happened. Stock specific approach will help, and that really helped in 2022. You saw some of the companies within the same sector. SBI Life did well, but HDFC Life not doing well. We saw Sun Pharma doing well, but Dr. Reddy Lab not doing well. So this kind of a divergence we will see. We saw that in FY 2022, and we will see in 2023, and that divergence will be more sharp in this financial year. So now I'm going in my prediction mode for this financial year. Sorry, Jason, I think I've exceeded my time limit, but let me continue with this. I'll run through now. We continue to believe that question that all of you bothers you. Will mid and small cap will continue to outperform after stellar performance in the last 2 years? Answer is yes. Why? Because if you look at it, even as on today, as I speak to you, only 7.7% of the overall market cap is accounted by the mid and small cap. And hence it leaves enough room for mid and small cap to do well. If you remember, I had done similar graph last year also, and based on that graph only I suggested that mid and small cap will do well, and that continues to do well. In fact, almost double the alpha as compared to the broader indices. Now, some of the other predictions, let me make. What do you say? Market will remain volatile. Do not expect returns to be linear. Returns in the equity market will be non-linear with the sharp kind of a volatility that we saw. We will continue. अगर आप समझ के चलते हो कि थोड़ी शांति होगी FY 2023 में, वो नहीं होने वाली है. Another thing which will happen, that GDP growth rate will be lower. I am making a prediction. GDP rate growth will be lower in FY 2023. Of course, some of the people anyway started downgrading. Fitch ho ya ICRA ho, they have anyway putting it. RBI will hike rate of interest anywhere between 75 basis point to 100 basis point in next 12 months. Not only that, even RBI will revise the inflation target for the next next year on an upward. Sector rotation ka story will continue in FY 2023 too, with the sharp divergence between the best performing and the worst performing, and within the same sector, some companies doing well and some companies not doing well. We do believe that FY 2023 would be a challenging year. So I'm making one more prediction now, okay, which was not part of mine. I asked today, am I right, how many people, investors made portfolio in excess of 40%, and the 10% of the people. The next year, if you have to do this similar survey, 0% people will make a statement like this. And the reason why, it's going to be extremely difficult here. Why? And I'll tell you the reasons why. I'm not saying out of, I have a strong reason why I believe it will be difficult here. High inflation, and inflation is going to remain more sticky than what central banks across the world makes you believe that. Change in the government, central banks policy stance. Now they will not make a statement, and they will not keep writing that, you know, inflation is transitory, and that so also. They will change. Not only the Fed will reduce its balance sheet size, but we would see more rate hikes in FY 2023. Another reason market will be challenging, because we have seen a very good rally in the market post April 2020. And hence, there would be some amount of fatigue that would come in now in the rally. And last but not the least is a geopolitical concerns. I'm not very sure these geopolitical concerns are going to go away so soon. In fact, I was listening to yesterday Uday Kotak interview given to Celine Ban on CNBC channel, and he did mention, Uday Kotak mentioned that somewhere market is not discounting enough way the geopolitical concerns. So that's what going to happen, and hence the 2020 is likely to be challenging year to make money for the investors. Now going to my next slide. What should you expect in terms of returns? Last year I had predicted single-digit returns from the broader market. I do believe, and of course, market supplies on the positive side. We saw tens returns in tens. I expect returns to be in the best at a single-digit. Commodity cycle which we are seeing uptrend will continue. I again repeat, commodity cycle will continue in FY 2023. So some of the prices of metal that we saw, food prices that we are seeing, the coal price we are seeing, I think they may continue going forward in FY 2023 also. Indian earnings, maybe it may get revised little downward. Why? Because of high inflation and slowdown in the economy, and both will play its impact in terms of top line growth and in terms of margin expansion, and this could result into a little low growth than what is being. So there is a high probability that as the year progresses, we may see little downward revision in the Indian earnings. Maintain 15 to 15,500 level, so you get an idea what is a downside you can expect from this level. And I do believe that whatever gain that we are talking about, that will happen in the second half. So in FY 2022, the gain was front-ended, in the sense we saw gain in the first half, not in the second half. This year, the new financial year, the gain would be muted in the first half, and more gain will come in the second half. Of course, this is my prediction, not necessarily that will the way going to play out, but that's what my belief is. So what would be your strategy in the new financial market? Do not try to time the market, but build discipline. No one has been able to time the market. If your personal portfolio is underperforming, which has been the case with most of you, take in help of an investment advisor. It's a time for you to take an investment advisor help. Otherwise, it will be difficult for you to generate alpha. Forget about generating alpha. Whatever the gain that you have made can get wiped out if you happen to be in the wrong company in the wrong time. Every dip in the market should be used as an opportunity to add more money in case if you have money. If you don't have, don't worry about it. But whenever you invest in the equity market, do not invest for 3 to 6 months. Take 3 to 5 years view, because as I explained you in that graph, on a block of 3 to 5 years, equity markets are always given positive returns. And if that has happened in the past, there is no reason why it should not happen today. Now coming to the slide which everyone is waiting for very eagerly, which is the portfolio which is going to beat the market in FY 2023. So I'm going to give you 10 stocks and I'll explain you each one. Angel One, we believe there is enough leg for this company to do very well. Why? Because of investors like you and me will keep coming. See, remember, even as on today, very small percent of the equity investors, small percent of the population invest in equity market. And hence there is a lot of headroom for that number to go up. And who will get benefit? The player like Angel One. If you look at the data which they keep disclosing every month, the number of active investors have kept on increasing. And hence we believe that Angel One will do very well. Second company, Bharat Dynamics Defense, very obviously geopolitical situation will call for defense as a obvious spending on defense will go up. Make in India, and India want to be an exporter of a defense, Bharat Dynamics should do well. GAIL coming in purely because of its distribution network of a gas business. Hindalco because of the metal commodity cycle which I was making you will remain strong. ITC while the FMCG company struggled, ITC did actually, in fact, for the month of March, I'm happy to inform you, Markets Mojo made ITC as a Mojo stock in the month of March. And for the month of March, ITC has the best performing month in many, many years now. So ITC, we believe, we should do very well. SRF, we believe, should very, very, why? Purely because of its business model of chemical business, that should play out very well. Suven Pharma, because of its CDMO business, which we believe should play out very well. Titan, because of its jewelry business. VIP, purely because of travel, schools reopening, and that makes the VIP business very, very robust. And whatever pain it saw last 2 years because of restriction, now will get taken care by. And Vedanta, again, a story of a commodity cycle, it should play out very well. So it's a fine mix of finance-related company, defense, gas distribution, metal, FMCG, which is ITC, chemical, pharmaceutical, travel-related, jewelry-related. So it's a very fine mix of various sectors which we have created for you, which we believe should outperform for the going forward. Now, how we should play? This is not a buy and hold strategy. These companies are not supposed to buy today and revisit them on 1st April 2023. This is not a buy and hold strategy. So what you should do, go to Markets Mojo website, okay, and buy and select the portfolio, which one, this is an aggressive portfolio I've selected. If you want, you can create moderate, you can create conservative also. I've selected aggressive 10 stock portfolio. Put the value. I've suggested this for 10 lakhs. You can invest 20 lakhs also, you can invest 5 lakhs also, you can invest 1 lakh also, whatever your choice is. But whatever we advise you, please buy the same company and the same quantity. And please follow, and we will tell you when to exit from that company. Remember, this is not a buy and hold portfolio. We will recommend exit at the appropriate time. But only when, if you have created your portfolio on marketsmojo.com, otherwise how would you know you bought this company or not? And if you don't know, how can we inform you? Please get out of that company. And once we advise you exit, we'll tell you what to buy next. If you are not a member, you can become Markets Mojo professional member. Why? Because very soon our price is going up by 100%. The price for 1 year would be 21,999. For 1 year, the price of Mojo Professional would be 21,999, 22,000 almost for 1 year. Against which, since you attend this webinar, you can subscribe for 1 year only at 11,999. But the best offer is this one, 19,999 for 2 years. So you not only you pay lesser amount against 21,999, you pay lesser amount of 2,019,999, but you get additional 1 year extra. I'll request my colleague Jason to please drop both the link, and then let's open the floor for question and answer. Over to you, Jason.
Yeah, sure. I brought both the links in the chat box. I'll pick this first question by Mr. Praveen Poddar. We have started buying crude from Russia. Will this help to control inflation and boost the economy?
Yes, sir. It should help, but sir, the quantity that we are buying from the Russia is a very small quantity. So is it going to move the needle? The answer is no. So yes, it's a good move by the government of India. And today on the floor of Parliament, Ms. Nirmala Sitharaman also mentioned that we have. Is there any problem from my side?
No, it's fine.
Yeah. No, there's a lot of disturbance at your end. Okay. So it's a good one, but I'm not very sure it's going to move much of a needle.
Okay. Moving on to the next question. This question by Mr. Galena Venkata. If you see the history of stock market, our markets have performed at the time of high inflation. Then how are you saying that it won't perform at this time?
No, why are you saying, what is it?
The markets have performed at the time of higher inflation. Then why are you saying it won't perform now when there's high inflation?
Because, sir, I gave you not only the inflation. Sir, I don't think you have listened very properly. And when you don't listen properly, this problem do happens, did I mention only high inflation? I said geopolitical situation. Market has rallied since April 2020, and there would be some amount of fatigue that will come in. I did mention that central banks' policy actions would be headwinds, a rate of interest, and so on and so forth. So I can imagine if I've said only one thing and then you could have said. I also mentioned that if the corporate earnings are going to slow down, if the GDP is going to be slowed down and corporate earnings are going to be little low, definitely is going to have an impact on this. Now, you may not subscribe to my views. That's fine, sir. I have no issue with that. But we believe that market will give single-digit returns in single-digit only. Now, we may prove wrong also, and you may be right also, sir. And we'll accept that in a great humility in April 2023. When we make presentation, I'll say what we predicted and what has happened the way I did this time.
Okay, we can see a lot of questions on Sri Lanka. This question by Mr. Hasib Badal. Sunil sir, good evening. Surprisingly, Sri Lanka market did well than Nifty in last fiscal year, even though the Sri Lankan economy is struggling badly. Does that mean investing in companies matter or stock selection is important, even if a country's economy is in bad shape?
Answer is yes and no both. See, if you look at Sri Lankan market, I think it's a very small size market. In fact, the total market cap of Sri Lanka would be less than even Reliance Industries. Number one. Number two, it's not a very liquid market. And when the market is not liquid, it's very difficult to know whether the price discovery is happening in a right manner or not. So your observation is right, but I would have been happy with this observation had this would have happened with some big economy. It's a very small market, and hence to come to a conclusion like this may not be a right thing to do, sir.
Okay, and I also got some feedback that my volume is a bit high. I'll try to keep the laptop a bit far from here. Yeah, moving on this one particular question by Mr. Shri Vignesh, she's actually giving an appreciation note. He says, I came to market in August only and I made 18% returns from August to March. But after coming to Markets Mojo, within 13 days, I made 7% returns. Thanks to Markets Mojo for you, sir.
Thanks a lot, sir. And we will leave no stone unturned to keep creating wealth for our investors. And that's our objective, motto at Markets Mojo, to make retail investors HNI investors. So we'll keep doing that, sir.
Okay, moving forward, this question by Mr. Karan Khatri. If you are suggesting that it is going to be a difficult year to make money, then at what time of the year we should pump in our lump sum amounts? Should we keep cash in hand for this year?
Sir, I also mentioned, sir, that do not try to time the market. So you are conveniently only looking at one slide of the sentence of my one slide and conveniently ignoring. I did say do not time to market. Your investment horizon should not be 3 to 6 months. If you're coming only for 3 to 6 months, then what we are saying is matters. I invest in a block of 3 to 5 years, and if that is so, I don't think it's going to bother you much. Now, having said that, I did mention that we do expect first half to be remain a little muted in FY 2023, and we do believe that the whatever return that's going to come will come the second half.
Okay.
Jason, 1 second.
Yeah, sure. Okay, I can also see a lot of questions coming on different topics. I'm trying to pick up more questions related to the equity outlook. And I will also try, if we can't speak back to your particular questions, just put in your email ID along with your feedback, and I will pass that to the feedback team, and we'll try to ensure that you're giving you a reply back.
Issue with the pest control here, so that's why I do. Yeah, please.
Yeah. Okay. Just moving on to the next question. So, Mr. Sunil, I can see this question asked by a lot of investors. This is, I don't know, they are asking you that why have you not included any IT stock in the portfolio? Is there any particular reason?
So, we have gone with our IP, and our IP suggests that that these are it's not that IT stocks are bad. What our IP suggests that this company will do better than some of the other IT companies. Now, as I told you, these are not a buy and hold strategy. Today, they are not there. Tomorrow, if some company does not do well, they will go out and it can be replaced with another IT company. That's possible. Am I right? So that's why we have taken say. Again, I repeat for everyone, this is not a buy and hold portfolio.
And also one more question which I couldn't actually ignore. A lot of investors, I think many of the new investors have asked, why have you not included any Adani Group companies in your portfolio?
So, sir, the reason is very simple. As I explained you, sir, in our system, mojo stock has to have a good or excellent quality. And in our system, quality get calculated not subjectively, but data driven. When we look at 5 years history, we look at the institutional investors holding, and then there are various parameters, ROE and so on and so forth. And based on that, none of this Adani Group companies are a mojo stock. If they are not a mojo stock, sorry, how can they come as a part of a model portfolio? So it cannot come.
Okay. Yeah, this one question by Mr. Dog Gautam. He says, why was BSE, which has performed, been rated poor, while CDSL, which has not performed that much, is rated high on markets value?
So, sir, I don't have any specific answer to that. Why not BSE and why CDSL? See, CDSL has become a mojo stock almost more than a year back, and it did very well, sir. It's not that it's not done well. But why BSE did not come in, I think in between, we believe that this company, I think, had a very average quality or something, and hence it could not become a mojo stock kind of a stuff. But I don't have a specific answer, Dr. Saab, that why. See, that way we don't claim that each and every story will be able to find out from the market. Sometimes we do miss out some companies. And what we say is that you need to look at overall portfolio. Is it making money for you or not? And if it's making money, you should be fine with that. So yes, you are right. We may have missed out on CDSL, but it's rather good to miss out some good company than to invest in a bad company which destroys your wealth. CDSL became a mojo stock almost a year back. It's up by 128%. It's not that it has not given money for the investors. But your point is right. Between CDSL and BSE would have given better returns. But yes, so that's a fact, sir. What you've observed is a fact, and we admit that.
And as I've asked the investors, so you can just put your feedback and the email just below that, because I can see a few investors just sending their email IDs. So just your feedback and just your email below that. And if we can't answer them, we'll reply to you back on the feedback system. Just one question from Mr. Sridhar. Why will FI selling continue in the next fiscal year?
No, sir, FIs will not continue. In fact, I'll tell you, I'm making another prediction. FI will invest more than what they will. So forget about the negative. They will be very, very positive in FY 2023. The reason is very simple. And now someone would say, if that is so, then why not the Indian market should do well? But then the logic is, then if they're sold, then why the Indian market is positive? So don't link it with FI investment and positive or negative. I think that the theory may not play out the way you think. So we do believe that FI will come back. There will be positive investors. They will have a positive inflow from FI in FY 2023. How much it would be, it's very difficult to say, but they will be positive.
And this question asked by Mr. Prathamesh, do you also give advice on when to exit on the trading calls you give? Do you have a particular target price that we should follow in the trading ideas?
In trading 80, sir, we do give target price and the stop loss, sir. So that target price becomes an exit price, and stop loss also becomes an exit price in case the script basically hit the stop loss level.
Okay, and a lot of other questions I would like Mr. Sunil to clarify. Is this portfolio of stocks a buy and hold strategy? How do you particularly invest in it?
Sorry, is this
portfolio of stocks a buy and hold strategy, and how do you invest in it?
So this is not a buy and hold strategy. As and when this company, we believe that performance is going to depreciate or underperform, we will advise you to exit from those companies and will replace with better quality stock. That's what we are going to do that. How do you invest in that? It's very simple. Go to www.marketsmojo.com, create a portfolio. This is an aggressive portfolio with 10 lakhs rupees. Whatever the amount you have, you put that amount, select the aggressive strategy, and it will generate the portfolio on the go immediately. Even if you do now, it will generate for you. And it will give you selection of the stocks, and it will be the same if you generate now for 10 lakhs. We'll give you name of the company. We'll also give you the quantity that you are supposed to buy, and you should follow that. As and when there is any movement in any of these companies, we will come and tell you that you need to exit from those companies. That will also happen. So that's how it will work, sir.
Okay, I'll just bring this one question by Mr. Umakant Sawant. I'm an HNI member and extremely happy with the performance. I have a question to you. Why are you not asking investors to sell stocks which have moved to hold rating so that better stocks can be suggested as replacement?
The reason we don't do it, sir, because we have observed that some of the whole companies also give a lot of money. Like, for example, Saregama. Saregama became a whole long back, but we continue to hold that company and give very good returns to the investors. Even Bajaj Finance was one, Bajaj FinServ was another one, where it moved to the whole category and post becoming a whole, it gave you very good returns. So as long as, sir, we believe that that company is going to outperform, then we continue to remain invested in that company. That's how very simple it works, sir.
Okay, we've got this one particular question by Ganesh. He'll ask me to pick it up. He's saying, Sunil ji, you are making webinars back to back on a daily basis. Do you personally make these slides or do you have a team to provide you with the content?
Sir, most of the slides I need to make it myself because I need to get a flow of my. But I do have an analyst who has recently joined us, and very soon he'll be in front of you people. He also helps me in making the slide.
Okay, and one particular question by Mr. Kankaraj Bilesha. Due to our closeness with Russia, US and NATO countries are criticizing India. Will this affect our IT and pharma business?
See, remember this question was asked me when India decided to buy that arms from the Russia in one of these webinars. And I said, no. See, today US need India to counter China. And hence they will not be in a position to take Ponga with India. So I don't expect our relations going little sour with US. In fact, India will be able to manage US also very well and Russia. So we'll be able to, and it's a great diplomacy that our Indian government has been doing. So I don't see an impact, sir.
Okay, I'll just move on to this one question asked by a number of investors. What's your view on the LIC IPO? Do you think it's good for us to invest in it?
So let it come, sir. We don't know what price they are going to come, what kind of a, what we call, quantity they are going to sell. So let it come and we'll come back to you, sir, what needs to be done if it are at the appropriate time.
Okay, and also I can see a few investors who ask the links that you provided for subscription. Would you only get the model portfolio plan or all the other features of Market Smoother as well?
No, sir, we'll get everything. So over and above model portfolio, you'll get research on all 4,000 listed companies. You will get, we release one stock of the month on 10th of every month. That also you will get it. You will get model portfolio optimizer. So if you have existing portfolio and if you want to run an optimizer on that, that also you'll get it. So it's all included, sir. Then we have a screener, then we have mutual fund analysis on mutual fund schemes. We also have a technical product, trading product. That's also included in this package. So when you pay 19,999 for 2 years, all these features are part of that, not only mutual model portfolio.
Okay, and also investor asked, do you have any personal favorite banking stock which they can invest in?
Sir, I don't. No banking stock. I believe that banking as a sector will continue to underperform. It did in last 2 years, and we believe that it can continue to underperform. I think you should listen to this Uday Kotak interview, which was given yesterday, and he was giving an example of how host card and the automobile and how that business got completely transformed. And he gave a very beautiful example. He was saying that something similar can happen to the banking as industry. He's a banker and is making a statement. Remember that.
Yeah. Okay, Mr. Sunil, that's with the Q&A session today.
Okay, so once again, wish you very happy new financial year. We have a very beautiful plan. This plan you are getting because we have not increased our price to 22,000 rupees for 1 year. Very soon we'll do it. I would request everyone to subscribe immediately at 19,999 for 2 years. If you don't wish to go for 2 years, you can go for 1 year plan at 11,999. So once again, thanks a lot for taking time out and joining this webinar. Thanks a lot, Jason, for hosting this webinar. Over to you.
Yeah, thanks a lot. I've also dropped the URL in the chat box. We have an event tomorrow by Mr. Mohit. It's a Q&A event, and he'll also be providing a strategy on how to invest in this fiscal year. And we are having thousands of attendees attending and thousands of questions coming in. So as I told you, if I'm not able to pick a question, I personally apologize for that. But you all can put in your particular question with your email ID below in the Q&A box. And these questions are going to our team and we try to reply them through our feedback channel. So thanks a lot for everyone for joining this event.